So it's an area I think we're looking at three different things. Obviously, the underlying terms of the managers. The better the managers do, okay, the more power they have to set their terms. And if you look just in the last 2 years, many of them have been lengthening their terms by 23 months. So the lockups have become longer. The second thing we're monitoring really is the new entrants. There have been quite a lot of new entrants, and it doesn't mean that you can't do well, but it's a high bar. And that's why you see the concentration of assets in the top, 5 funds. If you look at performance of the top 5 funds, it's 200 basis points higher than the next group, which is also interesting because I know people like to take a look at scale and say scale doesn't work, but there's another example of scale working.
When it comes to your own internal hedge fund, the crossover fund, that's a fund that's been down about 22% since it started. Can you talk to us a bit about your plan to get that crossover fund sort of back on track?
Yeah, I think we all know it's been a very difficult market for crossovers. I would say a few things. One, the crossover market is really not going to recover until the IPO market recovers. And if you just look at and you've reported on this, the number of IPOs this year are about 9 billion. In a typical year at this point, we would have had 27 billion. So that just gives you an idea. Now, the good news is that we have a lot of dry powder, about 50% of the money that we raised. So we're excited about that. And we saw the opportunities in the last 8 months really in the public markets, and we've taken advantage of that. And that's allowed us to pivot. So,
do you see the IPO market, though, rebounding back to sort of the pandemic levels, if you will?
I sure hope so.
Yeah.
I think it's important for companies to get capital, but it's all part of, again, my framework in a QT world.
Yeah.
QT taking 95 billion a month out.
Well, that's what I'm curious, because the level of IPOs that we had pre-pandemic was also in basically a zero-bound world.
Right, in a QE world when liquidity was flowing.
Right.
We need it even more now. I think my point is that you have strained regional banks, you have people shifting assets from bank balance sheets into money market accounts, and then you have a wall of refinancing. And all of this creates a need for liquidity.
Joe, this was a great conversation. Great to have you.
Thank you so much for having me.
Absolutely. That's Joe Dowling. He's the global head of Blackstone Alternative Asset Management. And our thanks as well to our very own Emma Palmer. Stick with us. We'll be back in a moment. From New York, this is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
It is a hurricane over real estate right now. We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief or some understanding of what the Fed's going to do.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
This is Bloomberg Markets to close, almost 2:30 here in New York. Let's get you caught up on what's happening in the commodity space. Abigail Doolittle, she's standing by right now with our commodity close. Abigail.
Yeah, Romaine, we have lots of green on the screen here for the commodities that we're taking a look at. New York crude is up for a third day, similar to the S&P 500, so a bit of a risk-on mood there. And of course, new boost for property in China. Well, that's helping out commodities because China is the world's largest user of natural resources. So New York crude up 1.2%. Copper, Dr. Copper up 1.8%. Potentially a positive tell on the state of the global economy. Wheat actually has flipped higher. Earlier, wheat was down just a little bit after yesterday's massive rally, up more than 8.5% on a variety of factors, including weather in Europe. Corn's still down 0.4%, but well off of its lows. But just for you, Romaine, because yesterday you were fortunate enough to be out, we took a look at a commodity we usually don't look at, that is orange juice, but still at a record high, a second day of record highs in a row. We, of course, have disease threatening Florida and Brazilian crops. And we also have Brazil's Citrasuco threatening a force majeure on some juice supply, super tight orange juice supply, Romaine. And Katie, up 50% this year, the best year since 2009 at this time.
All right, that's going to hurt my mimosa habit. Abigail Doolittle there with our commodities close. We want to pivot from that to what's going on in the labor market. A big breakthrough on that front. UPS reached a tentative deal to renew a 5-year contract with the Teamsters Union. This ahead of a month-end deadline to reach a deal. Art Wheaton joining us right now, Director of Labor Studies at Cornell University School of Industrial and Labor Relations. And Art, with the caveat that this is a tentative deal and you still have all the members still need to vote on it. And we know a lot can go wrong between that tentative deal and, of course, actual ratification. But give us a sense here as to the bargaining power that the Teamsters had heading into this.
Well, anytime you have 340,000 people all fighting for the same thing, it does give you a little bit of power. There's strength in numbers. And I think there's kind of an all-time or near all-time high union approval rating for the public sentiment. So they had a lot going in their favor. UPS has been hugely profitable since COVID and their increase in their size. So I think the unions had a lot of things working in their favor. The high inflation rate made their demands seem quite high. But they're trying to make up for lost time for the last few years.
And we should point out, I mean, the union touts the idea that this also affects part-time workers as well. So not just those who are on a full 40-hour work week. We've seen a lot of pushback by various workers at various companies, basically taking advantage of a tight labor market, Art, to kind of address a lot of the issues that, I mean, quite frankly, I'm sure you know, have been bubbling for decades now.
Well, I think it's a matter of collective bargaining was designed to give the unions an opportunity to try to encourage the employer to do the right thing. So the process worked as it was designed. UPS is still hugely profitable, and paying more for the part-time workers makes sense. It doesn't make sense for the union's perspective to have two people doing the same job get radically different pay rates. So they were trying to eliminate tiers and trying to bring up the part-timers who frequently were making less than you could make at a fast food or other retail operations when they're working in very hot, sweaty, difficult conditions inside a non-air conditioning building. So this wasn't about the drivers anywhere near as much as the people that move the packages and load the trucks for the packages. Those are the ones that desperately needed to have their wages increase.
Well, Art, Romaine brought up the tight labor market, and this is something I've been thinking about this summer, really, as we see strikes across the economy, these negotiations going on across industries. Should the labor market cool, which we know that the Federal Reserve is trying to engineer right now, what does that mean for these types of negotiations going forward, those that are still ongoing, if we see some of that tightness in the labor market start to abate?
Anytime you have a low unemployment rate and you see everybody trying to hire more employees, it gives you more of an ability to try to strike and ask for more. If there were no jobs available, everybody who's worried about an impending recession and losing your house, then there's more of a risk for going out on strike. But for the temporaries and the part-timers, they desperately needed to increase their wages or they couldn't keep their houses to begin with, that they really did need to have a significant pay increase. If they're essential workers, the union feels you should pay them as essential workers.
Yeah, and we should point out, I mean, this is going to be an issue that's going to play out for other companies, other industries. You mentioned that tiered wages, if you will, where newer workers making a lot less than some of their older counterparts, even when you factor in the longevity. We know this is a big issue in the auto industry, and UAW, they've got a lot of negotiating they've got to do on that front as well.
Absolutely. It's a lot of the same issues hitting a lot of the unions, that the tiers really exploded in use after the 2008 Great Recession. So as companies were facing significant bankruptcies and downsizing and radical changes to survive, unions were willing to negotiate the multi-tier so that the newer hires who weren't working at the time, so they weren't employees at the time, the second tier are for people that were future workers. They were willing to accept that only because the companies were struggling with the recession. Now everyone's making pretty good money. Profits are really high, as your show continues to show.
All right, Art, got to leave it there. Really appreciate your time. That is Art Wheaton of Cornell University's School of Industrial and Labor Relations. Still ahead on this program, tech earnings kick off today with Microsoft and Alphabet coming up after the bell, and then tomorrow, Meta results tomorrow afternoon. We'll talk about all of it next with Jefferies analyst Brent Thill about whether or not those AI investments will translate into earnings. This is Bloomberg.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Could face bigger challenges. So was next.
It was going to keep rate World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations, and we start off with the Mouse House. Disney downgraded Atlantic equities to underweight. The price target slashed all the way to 76, with the analyst saying a decline in ad spending on linear television is near a negative tipping point, which would hit Disney harder than its peers since linear TV, in that analyst's words, accounts for an extremely large portion of free cash flow. Shares down about 0.7%. Next up, let's look at Datadog. Upgraded to outperform over at Wolf Research. The analyst there says Datadog could end up being the fastest growing software company out there. Says his industry checks suggest easing headwinds and competition that could provide meaningful upside to Datadog's generative AI offerings. Those shares up by about 4.5%. And finally, let's take a look at Meta. Upgraded to buy from neutral over at New Street Research. The price target bumped all the way to 350 with Dan Salmon over there, citing very positive feedback on the company's AI efforts and sees alternative, attractive digital advertising trends that are going to drive outperformance in the near term. Don't forget, we're going to have Meta reporting after the bell tomorrow. Those shares today up 1%, and those are some of our top calls. We are waiting for a host of tech earnings after the closing bell today. That includes Microsoft. That includes Alphabet. Let's throw in Texas Instruments and Snap. They're going to report as well. Brent Till joining us right now, Jefferies analyst for equity research, to help walk us through some of the big names here. And let's start off with Microsoft, Brent, because so much has been said, I guess, about AI. Microsoft was, of course, at least as far as the big companies, to really come out and make a splashy event of its AI ambitions here. How much of that, if at all, is going to be reflected in the earnings tonight?
AI will not be reflected at all because products aren't even really shipping, but it'll be reflected in the next 6 to 9 months. So the AI hype is there. The reality of revenue is still yet to come. And so, as we've said, 90% of the hype is here in less than 5% of the revenue. So we're going to see it invert, and the revenue now come with hype in the back half of this year into 24. It will be a steady adoption. It's not going to be overnight. And remember, Microsoft will unveil across all its key pillars of products AI co-pilots that will help lift pricing anywhere between 30 to 100% in certain situations. So massive price lift, but again, it's going to be a staggered release. And enterprise customers aren't quite ready for it yet. They're prepping, they're getting ready for it. Yeah. But there's a lot of dangers of AI, so this is gonna take some time. But it's been reflected in the multiple in the stock. It has not been reflected in the numbers yet.
And I do want to break in here with some breaking news. We have some reporting from the Wall Street Journal that the Bank of California is in advanced talks to buy PacWest. Of course, this is according to people familiar with the matter, saying that a deal could be announced as soon as today, when both banks scheduled to report their earnings results. Of course, these are two mid-sized lenders that have really been under some stress in recent months. This would be a move, according to these people, to further shore themselves up. You take a look at PacWest shares, quickly dropped 10%, currently halted for volatility remain. You take a look at Bank of California shares, currently up to the tune of about 7%.
Yeah, and we should point out we're seeing the downdraft in other shares, including Western Alliance, down about 4% on the back of this news as well. We'll try to get you some more details on that as soon as we can, but we do want to go back over to Brent Thill over at Jefferies, and our focus later tonight here on a lot of earnings coming after the wire, mostly among the big tech names. We were just talking about Microsoft, Brent. Let's talk a little bit about Alphabet, Google, if you will. What is your expectation?
The expectation is positive. Q1 advertising wasn't great. In Q2, advertisers got more conviction that the environment wasn't going to go into a tailspin. So these macro indicators help advertisers spend. We think overall advertising has been good. The sentiment's been poor on Google. Many hedge funds have been shorted, believing they're going to lose in AI and Microsoft's going to win everything. It's not a zero-sum game. Our view, Google's going to win the consumer. Microsoft wins the enterprise along with Amazon. There's plenty of room for all three. So the sentiment's definitely more negative on Google going in. And we think ultimately they have a great AI behind the scenes. We just haven't seen the technology. So right now, I think everyone has been left with the impression that they're nowhere, when we actually think behind the scenes, they're further ahead than many of the other tech companies out there. So there's a gap between expectations and reality. We think the reality for Google is better than what we've seen, and the multiple's still really cheap on the stock. We still like it. We like it for different reasons than Microsoft, more on the consumer side and the advertising side, Microsoft for the enterprise demand.
And Brent, I do want to go back to AI, because obviously that's what everyone wants to hear about. And like you say, we're not going to see it in the reports that we're getting. And just broadly, I mean, zooming out from this quarter, is it too early to be picking winners here?
It's not too early. I think the hype is ahead of the reality, the revenue reality. So we're seeing this. You're seeing it first in NVIDIA and semis, and our semiconductor analysis has been very positive on NVIDIA. You need the picks and shovels to get the AI gold, and you have to set up the foundation. They're seeing it first. It will then spill to internet and software services. So these software and internet companies are buying the NVIDIA technology to build their services on. Those services are not priced yet. They're not available yet. Microsoft, 95% of their AI services still have yet to ship. So when we say this, that the AI revenue tidal wave is coming in the next 6 to 9 months. The AI hype wave is here. So right now, we're not seeing it. Again, even Microsoft last quarter said expect a 1-point tailwind for Azure because of AI. That, again, very modest tailwind. You're going to get a way bigger tailwind going forward. So it's coming, and it's very easy to pick the winners. Those with data and users.
All right, Brent, gonna have to leave it there. Appreciate you taking time for us. Brent Thill there over at Jefferies, a preview of some of the big tech earnings after the bell, including Microsoft, including Alphabet, Texas Instruments, and Snap. We were also scheduled to get earnings out of PacWest after the bell. We're getting a little bit of news prior to that. The Wall Street Journal reporting that PacWest right now is in advanced talks to be bought by Bank of California. You see the divergence in the shares. PacWest halted right now. The shares have dropped 10% prior to that announcement. Bank of California shares up about 9% here on the day here. Again, this is based on reporting by the Wall Street Journal, citing people familiar with the situation, that Bank of California is in advanced talks to buy PacWest Bancorp. We're going to dive a little bit deeper into that story as we get additional details. Stick with us. We'll have it all. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to Bloomberg Markets to Close. It's time now for our Wall Street Week daily segment. The host of Wall Street Week, David Weston, joins us every day at this time. And David, you always have some great interviews, and you actually found somebody and dragged them into the studio
with a little bit of history with Wall Street Week. Actually, yeah, we're delighted to have with us now Anthony.
I feel like we should be playing the music.
Exactly.
So Louis Rockheiser in the background.
That's right. Anthony Scaramucci, of course, is the founder and the head of Skybridge, but he also hosted a version of Wall Street Week in the day. So welcome, Anthony. Great to have you back.
It's great to be back.
Yeah.
I've got some of the old memorabilia. I'm going to send you one of the hats.
Okay. So let's start with China. There was big news out of China overnight about the stepping down of the short-term, actually, foreign minister, which was something of a shock. Somebody I think you know, he spent time in Washington as ambassador. Mm-hmm. I know Skybridge has been very active in China, and you have views about where we should be going. What is this likely to mean for the relations that we're trying to put back together between U.S. and China?
So, I'm a little bit of a contrarian because I know both parties now have decided that China is our great antagonist. If you listen to some of the campaign rhetoric from the presidential campaign, but I think long-term that's not in the best interest of the United States nor in the best interest of the Chinese, and for that matter, the world. And so I'm hoping long-term that we bridge the gap. I think the replacement of the foreign minister is a good signal, actually, from the Chinese, because the rhetoric was quite harsh. The rhetoric and tone seems to be coming down a notch. And my friends in China believe that now that President Xi has consolidated power and has sort of set himself up for the next decade plus, that there's going to be a rapprochement. And I hope there will be. Mm-hmm. We may have different ideologies and different ways of thinking, and we have a two-party system, they have a one-party system, but we're the two strongest economies in the world, and we need to figure it out. So we'll be doing our conference in Hong Kong, hopefully some point in 2024.
I think one of the big questions, Anthony, is where can we get along well, and where are we just going to be competing with each other? I mean, a lot of talk about red lines. We have some ideas of where the red lines are on national security. Where are the places that you think that we really can work with the Chinese economically?
Well, I mean, that's the big debate going on in Washington right now, right? Like, we've more or less stopped some of our chips, the AI chips going into China. We don't want them to stop their rare earth material shipments to us and our allies in the West. And so I think that's really where it has to be. China, whether we like it or not, has over the last 30 years been the Saudi Arabia of manufacturing. And so I don't think we're going to be able to reposition ourselves that quickly. Moreover, if you just look at the principles of global trade and thinking of David Ricardo, it doesn't make the most sense for the United States to go in that direction. Anyway, it's great campaign rhetoric, but it doesn't necessarily lead to better consumer benefits or better employment metrics for the United States. So I think we need to calm ourselves down a little bit. I think it's important for business leaders to be in China, have a presence felt in China. I like the fact that U.S. CEOs are traveling more to China, and I'll be making a trip myself to Hong Kong in September.
But is that consistency, that stability there? Because when we talk to CEOs, part of the concern they have is not so much that they don't want to do business there, is that policies seem to shift, the relationship with the U.S. seems to improve, and then it gets worse, and it's just kind of like nobody really knows where this all ends.
Well, listen, I think that's something that we do take for granted in our country, is the stability of our judicial and legal system. And so there's no capricious behavior by our judges, by and large, very predictable standards in contract law, and there's less predictability over there. It's one of the reasons why the United States should still be heralded as a reserve currency. There's no way anybody's going to be able to compete with us that way if you think of our free market system and our legal system. And so we're way ahead of the Chinese that way. But we have to recognize their rise is generally beneficial for the planet because less poor people, better. Not to go all the way back to George Kennan, but let's just go there for a second. Greater global interdependence, 2000 debacle for Web 1 and the NASDAQ. And many of my contemporaries swore off technology stocks, and they missed the greatest investment of a generation, arguably perhaps the best investment in U.S. economic history. So we're probably in a bubble for some elements of AI, but when you think of the promise and the exponential growth of what's going to happen in AI in terms of the efficiencies, the improvement in productivity, yes, there'll be some elimination of white-collar jobs and what have you, but in general, people's quality of life is going to go up a big tick, and there'll be another great wave of prosperity. So I'm an investor. We're planning new product offerings related to it, and I think long-term we'll be fine, but we could be sitting here 6 or 12 months from now.
Are you investing in like smaller companies, or are you investing in like the Microsofts?
Mostly larger traditional companies.
Okay.
But my point is we could be sitting here 6 months from now, and we could be talking about a bubble bursting in AI for a whole assortment of different reasons, and everyone will be in I told you so mode. But if they wait 5 years, they'll be well rewarded.
Well, let's talk about the timing specifically, because when it came to computers, came to the internet, it took a while for it to show up in productivity, like 10, 15 years. Might it take that long for AI to really show up in, for example, productivity?
So we don't think so, because we already think it is showing up in productivity. You know, I'm writing a new book, and I put into my chatster what would be a title that you would name Anthony Scaramucci's new book. Some of them were quite cheeky that I didn't like. Some of them were quite cheeky that I didn't like. Yeah, but some of them were quite good. And that would have been 3 hours of brainstorming. I submitted those to my publisher. They picked one of them, and off we go. And so you can find yourself in a brain blocking moment, and you can turn on one of these technologies, and you could have a breakthrough.
Well, we'll wait for that book eagerly, actually, Anthony.
Well, hopefully you invite me back.
We will, indeed.
I look forward to being on Wall Street Week.
Thanks so much to Anthony Scaramucci. He is Skybridge founder and managing director, and managing partner, I beg your pardon. And on Wall Street Week on Friday, we're going to be joined by Darren Williams, Southern Bancorp CEO. And then, of course, we'll have the whole program on Friday, and we'll have Laura Tyson talking about the jobs numbers. Romaine?
All right. Thanks to Anthony, and our thanks to David. I think we need to toss it back to Katie for some breaking news. Katie.
Well, we're continuing to follow this story, of course, from Wall Street Journal.
Connection lost.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. Live from the Bloomberg Interactive Brokers Studio, streaming on YouTube and Bloomberg Originals. It is Tuesday, July 25th, and whoa, back in the studio.
I'm back.
Tim Stenivek, we have missed you.
I've missed you, and I'm grateful to you. I'm grateful to everybody who filled this chair here. I know it was a team effort. Matt
There was like
Miller,
a million people trying to fill your shoes. Can
Maddie
I just tell
Mills.
you?
There were so many people in
Matt
there.
Miller, Gina Martin Adams.
Gina was here. Cool.
Damian Sassower.
Well, you know what?
It's tough to like live up to you.
Well, I'm glad to be back, and I'm grateful to the great family leave policy that we have here at Bloomberg, because I got some great bonding time with our new little baby.
Congratulations to all of you, Rebecca, and your kids.
Thank you,
It's really
Carol.
wonderful. We got a lot going on, kiddo. There's been a lot, and I kind of said and kidded with you that when you're lost, just say AI or Elon or Barbie, and you're kind of covered.
Yeah, I left for 5.5 months, and here we are with like a close to 20% rally on the S&P 500. A lot of that AI induced.
Absolutely, and we're going to talk about that thanks to Microsoft and the likes of Alphabet. They report after the close, but it does feel like when you're big tech, you got to talk about AI. Having said that, right now we are all talking about Bank of America in advanced talks to buy PacWest. Transaction could be announced as soon as Tuesday. This was coming from the Wall Street Journal, just crossed the Bloomberg moments ago, and we are seeing Bank of California up about 13%. PacWest, though, in the other direction, down about 11%. PacWest, one of those beaten up regional banks go back to March, right? That was the story. You were already at home, but I know you were following all of
I
this.
was. I mean, there was a regional banking crisis happening. I couldn't look away. I guess the question is, do we have potentially more M&A on the horizon with some of these other regional banks that have been beat up?
And that's what everybody's been talking about,
Yeah.
that maybe we need some consolidation, although these regionals are so important to a lot of communities. So anyway, we're following that, and we'll keep an eye on it, and let's see if ultimately we do get a deal maybe on this Tuesday afternoon. We mentioned Microsoft and Alphabet reporting after the close. We're going to talk about the AI. We're also going to talk about the president of the Obesity Medicine Association, who doesn't believe Ozempic or Wegovy are the answer to fighting obesity in this country. As we know, it is the cover story of Bloomberg Business Week as WW kind of pivots in terms of a new strategy because of these obesity drugs.
Yeah, we also got a great big take that we're going to be diving into, all about gun violence, not just here in the U.S., but around the world, and how the U.S. contributes to it.
Unbelievable story, a Bloomberg exclusive. Right now, though, we are watching the markets. We got a rally underway. We've got treasuries. We see yields moving higher. Right now, countdown to the close starts.
Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic here alongside Katie Greifeld. We're joined now with our global simulcast and welcome our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and that partnership, Carol Masser, with those folks streaming on YouTube. But a redhead just crossing the Bloomberg terminal, Tim Stenivek, is back in the seat again. Welcome back, Tim.
Hey, thank you. It's been a wonderful few months of bonding leave with our newborn. And I also want to say, Romaine.
You had a newborn?
Newborn, yeah.
Oh.
I want to be the,
I thought you were like on vacation or
maybe
something.
600th or 700th person to wish you happy birthday today.
Thank you, Tim. But anyway, it's great to have you back. I'm sure Carol loves having you back as well.
Yep.
The dynamic duo. Look
I
at that.
do. I missed him so much, and those were hard shoes to fill, although people tried, but they didn't. So great to have him back. Having said that, a lot going on. We know you guys just talked about this possibility of a bank deal among the regionals, but we do want to get to a story that's also among the most read on the Bloomberg. We are in this interesting moment with the Fed kicking off its meeting and everybody trying to figure out, kind of where we go from here. Well, it feels like if you look at some of the Wall Street community that they're already figuring out and moving ahead on a post-Fed hiking world, if you will.
Is that where we are already? I thought there was a Fed meeting going on right now. We're going to see a 25 basis point hike.
The debate,
is this a post-Fed world already?
We have done a 360 in terms of, I feel like, rates. JP Morgan Asset, bullish on equities. Invesco has done a 180 on risky debt. But that's kind of where it's going. It's like people are looking past it, Tim.
Yeah, and Invesco, interestingly enough, is betting on small and mid-cap stocks, Romaine, because they think, hey, forget a recession in the second half of 2023 or even the first half of 2024. They're saying we could see one in the second half of 2024. I don't know about you guys, but for the last 2 years, we've been talking about a recession on the horizon that just hasn't materialized.
Yeah, absolutely. And I mean, I think that's part of the problem, right? I mean, once you had all of that priced in, and then when it didn't appear, and now the data seems to suggest that it's not going to appear, at least not imminently here, then of course you get these types of moves.
You do get these types of moves, and it's been interesting watching economists across Wall Street push out those recession calls, but still try to stick to it. But let's talk about something
Is
other.
it just me, or did Tim get even handsomer since he's been gone?
From me.
He kind of looks like
It's
a
that
Ken.
jawline.
He might look
I know.
like a Ken.
Now that he's
doll.
back, I feel very self-conscious.
Mattel earnings coming later this
I feel
week.
like I need to lose some weight.
Nice.
I just had like 3 slices of pizza.
Happy
For your
birthday.
birthday. because
That
it was your birthday.
that pizza was in the building because of your birthday, Roman.
Yeah. Okay, let's talk about Roomba, please, because I want to talk about what we're seeing in iRobot. Shares currently down about 14%. This was such a fun story this morning. It's falling because Amazon lowered its offer price 15% to $51.75 a share. I had kind of forgotten about this potential merger. Of course, it was in a merger review, and now Amazon is saying that it'll pay 15% less than its original offer. Obviously, iRobot shareholders not too pleased about that, and you're seeing that in the shares.
Yeah, I still wonder what Amazon ends up doing with iRobot, with the Roomba, with the air purifiers, with the automatic mops, Romaine, that they have as well.
Automatic mop?
Yeah.
Yeah, that'd be nice. I love how they have the one of the dog in there watching the Roomba. I don't, with a nice clean floor here,
right.
I don't think people quite understand what pets and Roombas mean. But why? You didn't mention the real kicker here, Katie. Why are they doing this?
Theoretically, to track all of our movements all the time, wasn't that?
No, that's not my question. Why would they lower the purchase price from 61 to 51?
Does it have something to do with the some credit for ongoing business that they need?
It's a
Some money for
deflationary
ongoing business?
environment or disinflate, right? That's what's happening, right? Things are going down in price.
Yeah, it's that giant sucking sound.
Sign of the time.
Can I just tell you, did you guys listen to Surveillance? Tom Keene and Paul Sweeney were like, I don't know what this company
It's
does.
the 2004.
Like, they've never heard of a Roomba.
It's the
Oh, they've heard of
2004
a
Will Smith
Roomba.
movie that takes place in 2035 Chicago.
I had to call in and set them straight.
Tom just plays,
iRobot.
Tom just plays dumb. He's probably got like 12 Roombas like running around the house bringing him cocktails.
I've seen that. I've seen that. That's actually a way, yeah, that's a way to use it. All right, guys, we're going to be back in less than an hour's time. So great to have Tim back. Great to have
back.
kind of
Thanks,
the group
guys.
all together again. Anyway, we'll be back in less than an hour's time. Our cross-platform, we're going to break down Alphabet and Microsoft's earnings, the big ones, after the close. Join us at 4 p.m. Wall Street time for Beyond the Bell. It's like you never left, kiddo. Isn't it funny? It's like riding a bike.
You know, the first, I got to tell you,
What?
I'm so grateful to the leave that we have. I mean, we have our first child. I got 2 weeks where I worked, and it was such a big difference to be able to spend so much time, not just for taking care of a baby, but for also supporting my partner.
Yeah.
You know, through this.
Right.
And
You both work.
The first few months felt like time was really at a standstill. Then I walk in here. It's like I never left. I walk toward the studio and I'm like, I feel like I was just here last week. I think it's a good thing. I don't know.
It is a good thing. It means it's. I always talk about, when you have a great workplace, it's like a home away from home. And I know that sounds corny, but when you really work with people you love working with, it's a really special place.
Apparently, nobody in my neighborhood works because on the streets of Brooklyn, pushing a stroller through the summer.
Everybody's there.
Everybody's there.
Working from home.
I think it's like, working in quotes from home.
Makes me wonder if all of the members of the Fed are cozy. But based on a story that our Steve Matthews wrote, I mean, there's a lot of divergence when it comes to opinion. So we do want to get into it because the FOMC began its 2-day Fed meeting. Of course, we get the decision tomorrow. So let's see what Dr. Stephen Skanke has to say. He's back with us, Chief Economic Advisor at Keel Point. He's a former U.S. Treasury and White House National Security Council member. He's on Zoom in Washington, D.C. And Steve Matthews writing about the Fed and the clash of Fed hawks and doves deepening. Steve, of course, is Bloomberg News economics reporter. Steve Matthews in our D.C. bureau. And let's just set the backdrop. Dr. Skanke, let me start with you. What are you anticipating, or what's important about the Fed meeting tomorrow? Because we pretty much expect we're going to get another quarter-point rate hike. Unanimous or not?
Yeah, I think that's right, Carol. And it is great to have you back, Tim. and congratulations.
Thank you.
On your family.
He's helping out the economy. He's helping out the economy.
That's wonderful. That's exactly what we need, and build up that labor force potential down the way.
All at the service of the economy. Thank you. Also, truly though, Carol, you make a funny point. Supporting a local economy. I mean, I really saw the balance of spending shift from being in Midtown, right, to being in low local neighborhood, where it's like Tuesday through Friday is like a weekend during the week.
I bet, right? Because of all the stuff you guys were
Exactly.
doing. All right, so Dr. Steve Skanke, what do you expect the Fed? What's important about tomorrow's decision?
Well, I think the 25 basis point increase, which takes it to a 22-year high on the Fed funds rate, is baked in. And I think it's also probably highly likely that they're going to continue to indicate a bias toward further increases. This is the hawkish view coming out, absent significant improvement on inflation. And the thing is, they can do that. I mean, they truly are emboldened. The hawks in particular are emboldened by the fact that we still got a robust labor market. We still have, about a 2-to-1 ratio of vacancies to unemployed. There's a positive earnings outlook over the next 12 months. The earnings decline. Typically in this sort of environment would be earnings growth would be down 18%. It's down about 6%. Strong consumer balance sheet. You probably saw that the consumer net worth has bounced back up to 152 trillion, which is what it was at its high. And the S&P is up 18% year to date. What has the Fed got to lose by not getting head faked again on declining inflation?
Okay.
So sure, they're going to be hawkish. There's no percentage for them to look like they're softening.
Well, let's talk about that divide, and for that we turn to Bloomberg News economics reporter Steve Matthews from Steven to Steve. He's in our D.C. bureau. Steve, you wrote about the cracks inside the Fed deepening. Right now, what are the doves saying?
So I think the big picture here is everyone was hawkish over really the last year, and really last year and 3 months, because we had high inflation, we had low unemployment, and so there was great unity around the FOMC table. And now, as we're reaching the end of the hiking cycle, which a lot of Wall Street believes that tomorrow's hike is going to be the very last one, you're starting to see a split. On the side of the hawks, people like Chris Waller, the governor, and Jim Bullard, who's retiring, Loretta Mester of Cleveland, they are saying, we want to avoid the 1970s inflation again, and we're going to do whatever's necessary, and we'd rather err on the side of doing too much, and we have too hot of a labor market, and until that starts to show some cracks, we're going to have too much inflation. On the side of the doves, people like Raphael Bostic and Austin Goolsbee, Bostic from the Atlanta Fed, Goolsbee from the Chicago Fed, are saying, basically, let's not overdo it. And, what the problem with the inflation over the last 2 years is not that we've had too much demand, it's that, we've had a pandemic, and the pandemic has changed the economy, and you've had all supply disruptions and all these disruptive changes, and that's what inflation is about. So we don't really necessarily have to overdo it.
Feels like Goldilocks and the three Feds, to be quite honest with you. I mean, what's great is, too, I don't know if you guys read the editorial by Bloomberg editors. It's a Bloomberg opinion piece. But they remind us that if you look at the so-called core CPO, still 4.8% higher in June than a year ago, right? And so if, Steve Skanke, if the Fed is truly committed to 2%, and this opinion piece says the Fed shouldn't settle for above target inflation. If 2% is the real target, then we have to be careful, or the Fed has to be careful about pulling off the brakes, too early. And then inflation rearing its ugly head again. Housing starting to come back again. Wage pressures, wage inflation, still an issue.
Well, that's right. But when we look at the June CPI number, core prices were up only 0.16 month over month, which is equivalent to slightly less than 2% on an annualized basis. And I'd be the first to caution against trying to extrapolate too much from a 1 month move, but it's an indication that they can actually achieve their goal. As I said, there's no gain for them to back off from it at this point. And given how well other things are doing, I think they will err on the side of certainly hawkish rhetoric. Now, I also happen to think that the 25 bips announced tomorrow will be their last. But I don't think that they're going to say that it's their last. They want to keep the attention focused on their mandate and their plan to bring it down. And so I think that's why, notwithstanding, and I don't disagree with Steve Matthews' observations about the split. We even saw a little bit of that with the San Francisco Fed president in pointing out how much the Fed had done already when you add the quantitative tightening on top of the interest rate increases. But they don't want to look like they're giving up on it yet, even though I don't think we're going to see any more interest rate increases.
So, Steve, Matt.
Go
ahead. No, go ahead. Just quickly. Yeah, go ahead.
The other thing that's out there is over the last 12 months, we've had M2 money supply down 4%. We haven't seen that since the 1930s. Now, and we know that has, on average, an 18% lag. There's in the economics profession, there's a lot of folks that say, oh, money supply doesn't matter anymore, but I don't think it's a coincidence that after we raised the money supply 34% in the immediate post-pandemic period, that we got inflation at 9%, 15 months ago.
Yeah.
And when you look at when this basically started, about March or April of next year is when we would expect, when we could expect that to start to bite.
Right. Hey, wait, hang on a sec. Steve, just 25 seconds I saved for you. Unemployment, doesn't it have to go up, though, for inflation to come down very quickly?
There's a debate about that. Certainly the center of the committee, including Chair Powell, believes it does have to go up, that we've overshot full employment and we need to get at least back to maybe 4% unemployment rate. But, there are certainly people on the committee who say, the Phillips curve relationship between unemployment and inflation is dead. So
all right.
We'll have to see.
All right. Well, great story. Steve Matthews, economics reporter at Bloomberg News. Dr. Steve Skanke, chief economic advisor at Keel Point. And you are listening and watching Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:20 on Wall Street. We check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini. Stocks are higher ahead of tomorrow's expected rate hike from the Fed. We are watching Bank of California very closely. It is reportedly in talks to buy PacWest. PacWest shares down more than 20%. Bank of California in those talks. A deal could be announced today, according to the Wall Street Journal. PacWest is a Beverly Hills-based regional bank. It's been selling assets to improve liquidity. Shares of Bank of California are higher, and this could be a signal that, unlike most times when the acquirer shares fall and the acquired company rises, in this case, it's the reverse, and that may indicate, perhaps, that Bank of California could be getting a good deal with this purchase if it happens. Shares of UPS also in focus. Teamsters Union agrees to a tentative contract with UPS. Shares down about 1%. UPS committing to spending an additional $30 billion over the life of this contract. Still needs to be ratified, though. Consumer confidence jumping. Those headlines crossing the Bloomberg terminal just as Fed members walked into that FOMC meeting today. Conference Board Consumer Confidence Index for July sitting at a 2-year high, and the IMF is lifting its world growth outlook. The Dow right now up 67 points. The S&P 500 up 21. The NASDAQ, the big winner of the day, up 123 points. That's about 0.8%. And the yield on the 10-year Treasury right now, 3.9%. And that is a Bloomberg Business Flash. Carol and Tim.
He's
Hey,
back.
Denise, thank you.
Hey, I'm looking at the most read on the Bloomberg in the past 60 minutes, and I think 4 stories have to do with Bank of California and PacWest. So the regionals,
Is that it, Carol?
Well,
this is the last one.
Well, no, that's the thing. I think many think we're not quite through it yet. We're probably not even at the. I guess we're at the very early stages of the impact of AI. We've certainly seen AI euphoria, Tim, in such a big way in this first half of the year. Thank you, Microsoft. But you look at names like Microsoft, you look at Alphabet, so many others. It's just the expectations, the hopes, and we're starting to see, we see this in a big way in their valuations, their stock valuations.
Yeah, UBS, for example, expects that global AI demand is going to hit $300 billion in 2027, up from $28 billion last year, making AI one of the fastest growing segments within global tech. I guess the question is, what are Alphabet and Microsoft going to say about AI on their calls today?
Because let's not forget, for Alphabet, right, it's still about search and advertising, and for Microsoft, a lot of it's the cloud.
Have you used ChatGPT?
I played with it.
I played with it a lot over on leave, and I mean, it makes sense why people are worried about Google.
Yeah, right, in terms of the impact. All right, so let's see, because the bets that AI will revolutionize corporate America and deliver riches to the biggest companies behind it will certainly get a big test today as Microsoft and Alphabet report their first earnings since that AI fever broke out. So let's get to it. Ryan Vostelica, he writes it. Those are his words. I stole them because they were so good. He's equities reporter at Bloomberg News. He's in our Interactive Brokers studio. It's interesting, right, because we've been talking about AI so much, Ryan, but this is kind of the first big test, right, in terms of how much those stocks have and their valuations have run up. We'll see whether or not the fundamentals are there.
Yeah, absolutely. So I think the exception here is NVIDIA, which last quarter did have this absolutely explosive forecast. But the thing about NVIDIA is before you do any AI application, you do need the chips that it runs on. So see, the fact that they are already seeing this kind of concrete demand makes a certain amount of sense. The question is, all these other companies that have just added hundreds of billions of dollars in market cap this year, just on expectations that this is going to really accelerate and fuel this new leg of growth. Are we going to see it show up in these results right now? Are they going to give forecasts that kind of point to the idea that AI hype for them does represent a meaningful driver of revenue and is not just something that's going to be, the next quarter, like continually out over the horizon?
Yeah, that's what I'm wondering, and I'm wondering what's priced into these stocks already so far this year with the AI-infused run-up that we've seen. Not just NVIDIA, of course, but with the cloud providers like Microsoft, with the advertising companies. Because face it, that's what Alphabet actually is at its core.
Yeah, so I think on the software side, I think most people would agree that both Microsoft and Alphabet are the ones that are really some of the biggest players in here. Microsoft, of course, has invested in OpenAI. They've been very aggressive in building out their position in this space.
That's the parent company of ChatGPT.
Yes, exactly. And then Alphabet, which of course owns Google, they have been investing in AI different services for years and years. So these are two of the biggest players, and of course they have very deep pockets. They've been putting a lot on this, and now this is really kind of go time to see really what this means as far as their fundamentals and their revenue going forward.
But this is such a really good point. Like what you said, if you think about building blocks, right? It's all about chips. So those chip companies are benefiting, right? Because people are tapping into it. And the Microsoft story or the Alphabet story, it may be, I think it was our Anurag Rana earlier on Bloomberg Surveillance who talked and said, this is a longer term story. And maybe it's in 12 months we start to see the potential for some of these companies.
Yeah, absolutely.
Kind of grow into their valuations, right?
Yeah, absolutely. I mean, I would say Microsoft in particular, this is one that people are looking at on a valuation standpoint. The stock has done so well this year. It's up more than 40%. It completely erased all the weakness that it saw in the big sell-off of 2022. So there's certainly a lot of high expectations there. The valuation is above its long-term averages, and it really does need to not just meet expectations, I think, to keep this rally going, but most of the people I speak to say that it really needs to surprise to the upside in order to justify a multiple that's gotten pretty stretched relative to its own history.
I mean, do you have, Tim, when you were home, did you have you popped into a cab and a cab driver like, oh, you're in business news. What's with that ChatGPT and AI stuff? Like when cab drivers start to, ask about stuff.
Yeah, I mean, I have friends who are playing a lot with these things. I mean, the interesting thing, I think, Ryan, is how we incorporate this stuff into everyday life, especially with ChatGPT, for example. I mean, a friend of mine who lives in our building, granted, he's like a product manager for a tech company, but he set his ChatGPT to recommend meals to him, and he linked it to his Instacart, so it automatically bought the ingredients that were, for the meal planning, the meal prep that he was doing, and put them in his Instacart.
I get that.
But that's kind of difficult to do. It's difficult for him to actually make those steps. Like an Alphabet, in order for it to be successful in competing with this, needs to make it as easily as Googling something. How does it do that?
Yeah,
isn't that what investors are waiting for? They're waiting for this stuff to be as easy as bringing it to the masses.
Yeah, absolutely. So one thing I would note is that not too long ago, Microsoft came out with some pricing details for some AI services that it's offering, especially on the enterprise side. And the analyst reaction to this was that the pricing was a lot more aggressive than they anticipated, which on one hand could speak to how much it's costing to build this stuff out and deploy it, but on the other hand speaks to maybe the argument that this stuff is going to be so effective for people, so effective for businesses, that it can, Microsoft especially because it is one of the first movers in this space, make an argument that this is something you need to be paying up for and that has all kinds of applications and utility that you can use it for. So if it gives a forecast that kind of speaks to that idea that they are seeing this kind of demand, or that it can offer any kinds of services that will be useful to its enterprise clients or whoever, that could be something that would keep the stock going forward.
Yeah, it's like getting from enthusiasm and euphoria to actual fundamental impact, on the balance sheet. Having said that, we also have Meta and Snap later on this week, right? And we've been keeping Meta's been off the charts. And
what happened to the metaverse? Are they changing the name to the AI-verse?
I like that. But I mean, really, Ryan, when a company reports, it doesn't matter. All of us, as it's breaking, we quick type in AI or artificial intelligence to see, because it does seem like every company kind of throws that into the mix when they report earnings. Meta and Snap, Meta, again, an advertising story. Snap, same thing, right?
Yeah, absolutely. And both of them are also active in AI in their own way with different kind of AI and, augmented reality and virtual reality, all these other kind of services, which also rely on certain AI processing and functions like that. So I'm sure any commentary they give about what they're doing with this technology and what kind of opportunity they see from it, it's going to be very highly anticipated by investors. But I think obviously there's a lot of focus right now on what is the state of the economy, what is the state of the advertising market, what are they charging for ads, so on and so forth. That might be the first and foremost thing for short-term investors at least. But I'm sure any company within tech is doing something with AI, and I think people want to know more about that.
Well, and one thing I think about as you write, and is that you kind of broaden it out. If we take a look at the run-up, like Tim, you said, here you've been away, but you're like, hey, look at the run-up that we've seen in particular in the big mega cap tech names. It's a handful of companies like your Microsoft, like your Meta, right, that have really propelled the NASDAQ 100 higher this year. And this is why what we get from them is really important, because we might get some disappointment.
Yeah, I mean, I would say that
it's propped up the market in a big way.
Absolutely. most people I talk to, basically everyone I talk to, remains very optimistic about these companies over the long term. But in the short term, given how much they've run up this year, given that they are such a massive weight in the broader indexes, if you do see a disappointment in one of these stocks and there is a pull down, drawdown in the stock, that's going to pull down the overall market in a way that,
Well, to that end, Ryan, we actually get Snap after the bell today as well. We haven't talked about it much, but I'm old enough to remember when a miss that a Snap has would lead to a Facebook, or formerly known as Facebook, Meta platforms, actually falling quite a bit if they would say something about the macroeconomic environment or ad sales or privacy on the iPhone. Anything we should look to there?
Well, because they do, I think they report this afternoon. Meta is tomorrow, so I do think if they say something that's surprising, one way or the other with respect to the ad market, we'll probably see Meta move in the same direction just because both are so heavily correlated to the ad market. Of course, we also have Alphabet coming out today, and what they say about the advertising market is also influential for Meta. But
one quick thing, if we can, the NASDAQ 100 index closing with a free cash flow yield of 2.41% on Monday, near its lowest level in more than 20 years. Why is that important, just quickly?
Well, if you're talking about valuations and how much these stocks have come up this year, people are looking for additional juice in the tank for what's going to take us higher from here. It's going to be harder and harder to do as you get to these higher levels, and the free cash flow yield was something that people cited in particular to me as something you can't really look past.
So relevant with the earnings coming out later on today. AI, it's everywhere. Ryan, thank you so much. So appreciate it. Nice to have you in studio. Ryan Listelica, he's equities reporter at Bloomberg News here in our Bloomberg Interactive Broker studio. Check him out on Twitter and also on the Bloomberg. I mean, did you talk about AI a lot when you were home?
No, I would be.
Honey, where's the diapers?
No AI. I would show my wife cool things on ChatGPT, but that's it.
She said, "Stop it."
She says, "Stop." Put your
Baby
phone
needs
down.
to be fed. All right, let's get a check on world and national news.
Denise Pellegrini is standing by. Hey, Denise. Oh, Nancy Lyons. Excuse me. Hey, Nancy.
Hey, that's okay, Tim. Welcome back. President Biden is designating a new national monument in 3 states to honor Emmett Till and his mother, Mamie Till Mobley. The 14-year-old black child from Chicago was kidnapped, beaten, and brutally murdered in Mississippi by white supremacists in 1955 for allegedly whistling at a white woman.
The president emotionally recalled the teenager's murder. I found myself trying to temper my anger. It's hard to relive this. In the nation's reckoning with hate, violence, racism, brutality, it's hard to fathom. Hate never goes away. It just hides. President Biden assailed those who would ban books that seek to teach the truth about dark chapters in American history. In Washington, Irv Chapman, Bloomberg Radio.
UPS and the Teamsters Union say they've reached a tentative contract agreement. In a statement, they say the deal increases wages for all workers and includes dozens of workplace protections. Meanwhile,
the union, united, will never be.
Nearly 2 weeks into their strike, SAG-AFTRA members are pressing for action on a new contract. They held a rally today in New York's Times Square. The actors are fighting for regulations when it comes to the use of artificial intelligence and residual payments from streaming. Investigators are wrapping up their search of the New York home of Rex Heuermann, the suspect in a string of Gilgo Beach murders. Suffolk County District Attorney Raymond Tierney says they found a number of items, including nearly 300 weapons.
I would say that we have obtained a massive amount of material, all of which has to be cataloged and analyzed, and it's going to take quite some time.
Again, District Attorney Raymond Tierney. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:40 on Wall Street. We do check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini, and we have breaking news in the regional banking industry. The Bank of California in advance talks to buy PacWest Bancorp. That is according to the Wall Street Journal. Deal could be announced today. Shares of PacWest are plummeting. Shares of Bank of California, they are higher. And now we go over to the First Word breaking news desk for today's afternoon call with Bill Maloney. Hey there, Bill.
And good afternoon, Denise. U.S. stocks in the green today with NASDAQ leading the way higher. The Dow is currently up 62 points. S&P's gain 18, while NASDAQ is higher by 0.8%. The U.S. 10-year yield at 3.9%. Gold is up 10. Oil is climbing. And Bitcoin is higher by 0.5%. Among the main 11 S&P sectors, leaders were materials and tech. Financials and real estate were under pressure. And leaders to the upside in the Dow, 3M and Dow Inc., while travelers fell 1.6% and led to the downside. In deal news, Amazon to acquire iRobot for $51.75 a share $51.75 a share. That's revised down from $61 a share. And after earnings, GE rose 6% to its highest level since 2017. Raytheon plunged 12% after numbers. And in other news, UPS reached a tentative labor deal with the Teamsters to avoid a strike. Wrapping things up, Microsoft, Google, and Visa report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Denise?
All right, thank you, Bill. And to hear live breaking news over your Bloomberg terminal, you type SQUA GO on that terminal. And that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Under 18 minutes left in today's trading session. It's a big day. We know the Fed kicked off its two-day meeting, but what we're really focusing on, Tim, is the Microsoft and Alphabet earnings after the close bell.
Or are we focusing on the Fed decision?
No, it's earnings right now.
But,
Don't
you know,
feel
think back to 6 months ago.
I know.
What was driving the market? Was it what the Fed was doing, or was it the earnings of one or two companies?
I feel like it was, the big macro for
exactly.
Right? But
Sounds like you read a nice little article earlier in the day.
I want to know about fundamentals.
Okay.
I want to know. I also want to know what Michael Shelton has to say. He's Executive Director and Chief Investment Officer at the Registered Investment Advisor Hightower RDM Financial Group, joining us once again on Zoom in Westport, Connecticut. It is a big day. Michael, good to have you here with Tim and myself. Big tech earnings, the Fed decision. What's more important to you, and what do your clients most ask you about?
Well, there's a lot going on this week. We have 166 companies in the S&P 500 reporting, none more important than some of these big tech stocks. I think for this full week, the three things we're watching the most are, one is all the earnings that are coming out, two is the Fed meeting tomorrow, and on Friday is the PCE inflation index, which the Fed has been watching pretty closely. So I think overall, investors are wondering what the outlook for the market is in the second half of the year. We came into this year with a lot of pessimism. There were some reasons to be negative. There were a lot of the traditional historical sort of economic indicators like the shape of the yield curve and the leading economic index, which historically have forecast recession. So there was a lot of pessimism in the markets. Fast forward to today, things are sort of in a better place. I think investors are looking at the market with a sort of a glass half empty, as a glass half full, as opposed to glass half empty right now. So we don't think we're completely out of the woods, but things are a little bit better than they were starting the year.
I mean, if you look at the S&P 500, things are a lot better than the start of the year. We're up close to 20%. The big question is, what could derail this rally?
Yeah, so that's a good question. I think the thing that has stood out to us for a while is, one is that the Fed overdoes things. Historically, unfortunately, the Fed has a tendency to crash the party. So if they raise rates more than expected, tomorrow there's like a 99% chance of a quarter point rate hike. And then following that, there are three more meetings this year. So interestingly, at each of the next three meetings, there's about a 20 to 35% chance that the Fed raises rates by another quarter point. So if they raise rates too much, that would be a factor. Second would be if inflation does not continue to come down as expected, that would be a problem because that was sort of factored into a lot of decisions, a lot of investor sort of outlooks that the Fed would be able to move to the sidelines. And third, most importantly, is since stocks tend to follow the direction of corporate profits over time, if corporate profits don't follow through and rise starting in the fourth quarter of this year and early next year, that could be a problem.
I want to jump in for a second because you said the Fed could crash the party. Sometimes you have to crash the party. Sometimes you have to do the unthinkable. Just ask, Paul Volcker what he had to do, right? There is a lot of writing going on that if the Fed is true to that 2% rate, as you said, that one of the things that you are watching of 3 is the PCE inflation index. So if the core or whatever metric that the Fed really watches that is still above 2%, if that's what we've got to focus on, then maybe the Fed has to keep raising rates. Do you agree with that?
Yeah, the Fed's walking a tough line here. In some of the speeches that that Powell has given, he's been firm about bringing inflation down to 2%. But it is possible that if inflation gets down, say, below 3%, and we start to see weaker economic
Which
data...
inflation, though? Which inflation? Because there's so many different ways to dice and slice it.
A good point. So the real inflation rate that he's watching is the core PCE index. And you could also throw in the core CPI index. But the core PCE index, which is much higher than 2% right now, is sort of what he's looking for. So, just to put things in perspective, the overall CPI inflation rate was 9.1% a year ago this month, and now it's down to 3.3%. The core PC index is currently, I believe, at 4.8%, and that was either in the mid-5s or mid-6s about a year ago. So inflation is coming down. The core numbers not as quickly as expected, although based on a number of trends, it does look like those numbers should continue to sort of move lower as we go through the end of the year.
Is this rally warranted, Michael?
I think we're starting to see a little bit of exuberance in the market, or maybe you could look at some of the sentiment indicators, which are starting to get a little bit, maybe the sentiment indicators are starting to heat up a little bit, just a bit. For example, if you look at the American Association of Individual Investors survey, we almost have 30% more bulls than bears, which is the highest we've seen in some time. In addition, if you look at valuation levels, for the forward 12 months for the earnings for the S&P 500, we started the year at a little over 17 times, and now we're over 21 times. So we've seen a lot of positive momentum in the market. Some of it's warranted because it looks like the possibility of a recession or a downturn in the economy has been put off till later this year or early next year. I think the rate of increase in the markets will probably start to ebb a little bit. But one last thing I think is important is that we're starting to see some broadening in different parts of the market. So for example, so far this quarter, the equal weighted S&P 500 is outperforming the S&P 500. And areas of the market like financials and energies are outperforming tech. So that's a healthy thing for the market to continue to move higher.
Would you be buying big tech like your Microsoft or your Meta or your Amazon or your Netflix at this point?
We're big believers in technology. You need to have some growth in your portfolios. We're financial advisors, so we're trying to make sure that clients meet their long-term investment objectives, whatever those may be. So you want to have some technology in your portfolios. We own the big cap tech stocks, and not all of them, but we own them. I think the important thing is to size them appropriately within client portfolios.
So just about 30 seconds left, Michael. What would you say to somebody who sat on the sidelines with a lot of cash over the last few months and missed out on this one?
Sorry. No, sorry.
Well, I think the important thing is this, to understand that client's long-term investment objectives. Obviously, you have to think about their risk tolerance levels, but it seems like the markets are likely to continue to sort of grind higher into the end of the year. There are a lot of investors sitting on the sidelines. We have more than $5 trillion in money markets. Not all of that's going to come out because cash now has an attractive yield. But as long as the outlook for the economy is such that it's so resilient and the outlook for a recession is put off till next year, I think the odds of further upside in the markets is positive, although we certainly will have some sort of pullback or correction before too long.
It does feel like we need a little bit of a correction. I feel like a lot of people are calling it. There feels like so much enthusiasm out there. Michael Sheldon, Executive Director and Chief Investment Officer at Hightower RDM Financial Group, on Zoom from Westport, Connecticut. You're listening and watching Bloomberg Business Week on Bloomberg Radio.
your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. The Bank of California is in advanced talks to buy PacWest Bancorp, and a transaction could be announced as early as today. This is according to the Wall Street Journal. Now, Centerbridge Partners and Warburg Pincus, they do plan to contribute equity to help fund this deal, according to that report. PacWest is a Beverly Hills-based regional bank. It's been selling assets to improve liquidity since all those problems with some other regional lenders earlier this year. Meantime, if you're waiting for the next Disney movie, be patient. Bloomberg's Steve Potisk explains why.
Denise, with Hollywood actors on strike, they won't go out and promote any upcoming films or shows, and that has Disney taking a close look at its planned film release schedule as it considers delaying movie premieres. Sources tell Bloomberg films that might be affected include Poor Things, Next Goal Wins, Wish, and Magazine Dreams, which are all slated for release this year. Some films may be too far along in their marketing to change. Haunted Mansion is scheduled to hit theaters this week, and last week Disney released a trailer for superhero film The Marvels, saying it's scheduled for November 10th. Disney already shook up its release schedule once this year, delaying some major films by as long as 3 years. Denise?
All right, thank you, Steve. And get ready to pay more if you use Verizon. The company is raising the monthly price for its home broadband services by $10. Last year, you remember there was a price hike for their mobile plans. And those are some of the company stories we are following this hour. I'm Denise Pellegrini, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right. In just about 4.5 minutes, Tim and I are going to head over to our TV colleagues, Romaine and Scarlett. We're going to count you down to the close on this Tuesday. Also break down those Microsoft and Alphabet earnings. In the meantime, what's really top of mind is this Bank of California and PacWest. Wall Street Journal reporting that Bank of California advanced talks to buy PacWest, which is really interesting considering a story that is among the most read on the Bloomberg, Tim, that has to do with BlackRock.
Yeah, this story by our own Scylla Brush writing that BlackRock is poised to become a bigger buyer of assets that banks unload to improve their capital and liquidity. This after concluding that the industry faces years of upheaval brought on by high interest rates, stringent new regulations, and possible consolidation.
Kind of like not quite a one man's trash is another man's, or one bank's.
Well, okay.
I don't know. I shouldn't say trash because that's not fair.
So then what does BlackRock do with this?
One bank's assets is another bank's.
So then what does BlackRock do with this, with these assets? Do they spin them off later?
I guess they could, right? They could combine them. They could do different things. I mean, this is where, you go through a financial institution's assets, right? And you figure out they're a higher credit quality. This is something we talk about all the time. And there's value absolutely in there and in them. And so maybe they reshape them into new entities, if you will.
So it's not just BlackRock, though. There's an increasingly crowded field here of large companies going after these cast-off assets. Private equity and credit managers have been angling to buy dislocated assets from banks. And some of the country's largest alternative asset managers tried to get into the U.S. government process to auction off lenders after 4 of them collapsed earlier this year. I guess from a regulatory perspective, the question is, okay, well, do you really want to take that on? Because banks are and financial institutions are very highly regulated.
Yeah, absolutely. That's a really good point. But a lot of what we found out from the regional banking crisis is that there were a lot that were under the radar because...
Are they still going to be under the radar after this?
Because they weren't big enough, right? And they kind of... So it
But
seems,
those days are over, right?
Well, it feels like the bar is getting smaller, but... I think it's interesting. And the other part, you talked about private equity and credit managers, angling to buy these dislocated assets. You and I talk about every time we've been to Milken, the private lending market and their role. And you do wonder how they kind of roll all of this together. I don't know.
How was Milken?
It was great. We missed you.
Missed you, too.
You would have loved.
I had a lot of FOMO with you guys at Milken.
It was, again, all about private markets. All right, guys, time to head over to our TV colleagues, Romaine and Scarlett. We got some big earnings coming your way. Tim and I joining them beyond the bell. It starts right now.
Going to bring several earnings. Microsoft, Google, Texas Instruments, Visa, Chubb, Teladoc, to name a few. Stick with us.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Masser and Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio Originals, and our partnership of those folks streaming on YouTube. Carol?
Yeah, I'm thinking about the earnings, right? Microsoft and Alphabet coming out after the closing bell. We have seen an uptick in the equity markets, although we've rolled over those highs. But I'm looking at Microsoft. Tim, it's up 1.8% in today's trade ahead of earnings.
Look, these earnings happening on a day where the Fed starts its two-day policy meeting. We hear from Jay Powell tomorrow, Scarlett. And just to think how much has shifted in just a few months, we're focused on two mega-cap tech companies, which of course we'd always be. But the Fed has kind of taken a back seat because we know what's going to happen with the Fed. And, you know, I guess we're in almost a post-rate hike environment.
Right, because everyone's looking ahead to when the rate cuts will come. Yeah, there seems to be more clarity about the rate outlook. And the big question mark right now is whether these big tech companies deliver on their earnings promises and justify the gains that we've seen.
Yeah, absolutely. I mean, multiple expansion has been pretty fierce, at least when it comes to some of those individual names. But again, if you believe in some of that hype around AI and that there is substance behind it, maybe that multiple at 40 times doesn't look quite as expensive.
Yeah, no, that's a really good point. We were just talking with Michael Sheldon over at Hightower RDM, and what he said, what's interesting in the markets and what he thinks is a positive is something we've talked about, the broadening out of some of the gains. It's not just about technology anymore, and he thinks financials and others, that has shown some strength in the market, and it's a good sign.
Absolutely, and I mean, we talk about on this day where the S&P 500, a modest rally, but what's leading that rally is not tech, it's materials. Materials as a group up about 2% here on the day. Big tech doing its part as well, up about 1% as a group. You put it all together here, and you still have a market relatively unchanged. All right, we have a lot of earnings to get to. The S&P 500 going to finish out the day up for a third straight day, 0.3%. The NASDAQ Composite up for a second day, up 0.6%. The Dow Jones Industrial Average only up 0.1%, but that's good enough for a 12th day of gains, long as a winning streak going back to 2017. If it hits 13 days, that would tie it for the longest winning streak for the Dow Jones Industrial Average since its inception more than a century ago. And real quickly, the Russell 2000 up for a second day here as well. Only unchanged here on the day, only up by about a point or so.
Find that interesting, right? We should kind of stop talking about the Dow, and here we are talking about it again. Hence, though I am going to go to the S&P 500, Scarlett, because we are seeing most names in the index, although almost an even split, but 292 to the upside, 210 losing some ground today, one unchanged.
You know, I was looking at the performers, the best performers, the laggards, and it really feels like we've gone back to the old playbook of the tech companies leading the way and the banks lagging behind. And I believe we have some earnings crossing right now. We have Microsoft and Texas Instruments. Why don't we start with Microsoft? EPS, Carol, of $2.69 a share.
Yeah, let's get to it. So Microsoft crossing, as you said, fourth quarter revenue, $56.2 billion, folks. That is a beat. $55.49 billion was the estimate. Cloud revenue, this is such an important metric. We're focused on AI, but cloud is still so important. Fourth quarter intelligent cloud revenue, $23.99 billion. That's pretty much in line. The estimate was $23.8 billion. Fourth quarter EPS, we're looking at $2.69 a share. Productivity revenue, $18.29 billion. That's better than the street estimate of $18.1 billion. And personal computing revenue, $13.91 billion. That's a little bit better than the estimate of $13.58. Fourth quarter revenue, though, again, in total, slightly better than what the street was expecting, $56.19 billion, $55.49 billion. Microsoft right now, it's down about 2.5%, but it's bouncing around. Remain.
Alphabet shares, Alphabet also coming out with its earnings right now. Here are your 2Q numbers. EPS, a beat at 144. The street on average was looking for 132. Revenue, that of course, when you back out those acquisition costs, coming in at about $62 billion. That's about $2 billion better than what the street was looking for. I'm going to go through a couple of these sectors just so you have some sense here of where the money's coming from. YouTube ad revenue, a beat, $7.67 billion. The street was looking for $7.4. Google Cloud coming in at about $8 billion. That's also a beat there here. And Google Services revenue coming in at 66.29. That's when you put the TAC back in. That's also a beat here. So it looks like a beat all around. And a couple other just quick notes here, Tim and Carol. Looking at some headlines crossing the wire saying that Alphabet is taking actions to optimize their global office space.
Okay, I can read between the lines there. Yeah, I mean, Alphabet, a huge owner of real estate around the world. Here in New York City, a massive owner in downtown Manhattan, over near in the Chelsea area and right near Chelsea Market. And it means that, you know,
and just sorry to interrupt you here.
Yeah, go ahead.
Also getting a headline right now, Ruth Porat the CFO at Alphabet, has now been promoted to the role of President and Chief Investment Officer.
Okay.
So we're going to definitely have to find out exactly what's going on there. But Ruth Porat, of course, the longtime CFO there, who we speak to almost every earnings season, is going to assume the role of President and Chief Investment Officer. And if you want to read in between the lines there, Tim, I don't think you have to.
Yeah, Alphabet announcing plans for CFO transition. Back to the real estate, though, this is something that we've seen from many tech companies around the world. As people haven't been coming into the office, Carol, and they've been working from home, they're scaling back on those real estate investments. Look at what Meta Platforms has done, too.
Yeah, I think this is really interesting. And just going back to the changes at Alphabet, I mean, this, right, in terms of, putting the financial person in charge and transition, you do wonder about what's the future direction of the company or what was going wrong, perhaps.
Yeah, or maybe what was going right. I mean, she had received,
right.
I mean, she's obviously gotten a lot of accolades for the way that she's guided the finances of the company here. And there's always talk about the leadership roles that women have and whether that's a dead-end job or whether it's going to lead to the ultimate goal, which is to be a CEO.
And the CIO position perhaps suggesting that Alphabet is going to be making some acquisitions, has to manage its portfolio a little bit more aggressively or just in a higher profile way than what it's done so far. We also have earnings out of Texas Instruments, the chip maker. It sees third quarter revenue. I'm going to just start with the outlook here of $4.36 billion to $4.74 billion. The consensus estimate is for $4.59 billion. So certainly within that range. We also hear Texas Instruments saying it saw weakness in its end markets for the quarter that ended, except for automotive. So again, some bearish commentary from that perspective, but some candor when it comes to what its customers are demanding. EPS for the second quarter, $1.87 versus the previous year's $2.45. And on the top line, $4.53, $4.5 billion for revenue, versus a consensus estimate of $4.35 billion.
I want to get back to shares of Alphabet in the after hours are higher right now after announcing the second quarter results. As you mentioned, Chief Financial Officer Ruth Porat transitioning, appointment of President and Chief Investment Officer. I do want to talk about AI here, Carol, because that is really what investors are looking for. How does Alphabet, a company that is so dominant when it comes to search, planning to integrate AI into its search and make money when Microsoft has invested in OpenAI, when Microsoft is going all in on this, and when the concern is that companies like OpenAI threatened Google's dominance in search?
Well, and these transitions, right? We're so focused on artificial intelligence. Let's not forget, though, still Alphabet, it's all about search revenue. I mean, that is the big kahuna when you think about what moves the needle financially at that company. Romain, what do you got?
I just want to jump actually off this. I had something to say about Alphabet, but I think we need to turn our attention real quickly here to PacWest. We're now getting confirmation here of that news that the Wall Street Journal broke a little bit earlier. The Bank of California does plan to buy PacWest. Now we're learning that this is going to be an all-stock deal here, and there does involve some private equity money. Warburg Pincus, among a group of private equity companies that will provide, it looks like about $400 million in equity at a minimum here. But the combined company is going to have to repay about $13 billion in borrowings, and those repayments are going to be refunded by asset sales here. So kind of a complicated deal that's going to include the need to raise some equity, the need to sell some assets, the need to swap some rates here. But overall, the real headline here is that PacWest now going to be absorbed by Bank of California.
All right, let me just jump in here because we have Visa reporting earnings as well, and this is an important read through on how higher rates and inflation are affecting consumer spending, particularly here in the U.S., and whether international revenue perhaps is making up for some of the weakness. Right now, on the third quarter numbers, it's a beat across the board here. For EPS, $2 versus $1.60 on an adjusted basis, also a beat by 5 cents. When it comes to net revenue, $8.1 billion. Analysts were looking for $8.06 billion. And total Visa processed transactions, $54 billion. Analysts were looking for $53.5 billion. And third quarter cross-border volumes at constant currency up 17%. So there's that reflection of how cross-border spending is a bright spot because customers are swiping their Visa cards, they're going abroad, and they're using them.
I want to go back to Microsoft, still down about 2% in the aftermarkets. What I thought was kind of interesting is the company says it's going to provide guidance on the earnings call, which makes me wonder, okay, so they're not laying it out here, and we're going to have to wait to hear a little bit more about the outlook. And we've talked a lot about, right, so much enthusiasm, Romain, about this name surrounding AI. I get it. But many, including Anurag Rana, who I was listening to Surveillance this morning, saying it's going to take a while for this to really pan out.
And we should just point out, Carol, I mean, Microsoft tends to do that. They tend to sort of not put the forward-looking guidance in the statement. Basically, you have to tune into the conference call to get that here. But your point is well taken. I'm wondering if we can go back for a second to Alphabet here and the promotion, if you will, of Ruth Porat. In the press release, it's interesting. They point out that she's going to retain her CF role. So remember, she's CFO now. She's going to retain that role. So she's basically adding 2 additional roles as Chief Investment Officer and President, reporting, of course, directly to Sundar Pichai, who she's always reported to. But in here, they talk about how she's going to be responsible directly for managing the investments in that other bets portfolio. And remember, they had kind of minimized the emphasis on that portfolio over the last couple of years. I think as investors got a little frustrated that they were spending a lot of money there and not necessarily showing a profit for it. But the idea that she is going there, and they specifically talk about her financial discipline in other areas and how she can bring that to the other bets realm, I think is somewhat interesting here.
Well, it's definitely broadening out, right? And it's much, a more senior role, if you will, right? And she still reports to the CEI. So you do wonder how much she will be involved in terms of strategy going forward. Already involved, right, as the CFO of this company.
Yeah, absolutely.
All right, guys, a lot happening, and we're seeing these stocks move in the after hours. So a lot we'll be watching out to on those earnings calls. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals breaking down those earnings, and of course, getting confirmation of that Bank of California PacWest deal. That's a wrap. Radio, TV, YouTube, and Bloomberg Originals. We'll see you again tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody. We do have Snap just crossing the Bloomberg terminal. I just want to point out second quarter revenue, $1.07 billion. That's a little bit better than the $1.05 billion estimate. Also talking about the third quarter, adjusted EBITDA loss of $50 to $100 million. Tim, the loss was for $2.14 million. So that's a much bigger disappointment.
You should see the way this stock is moving after hours, Carol. We're down 15%. Look, it's a knee-jerk reaction right now. 14%, 13%, 12%, 11%.
Yeah.
It's bouncing all over the place, but it's in one direction, and that's down.
All right, so definitely seeing that on the move. All right, we want to go back, though, to Microsoft. We just talked about their earnings coming out. As Romain reminded me, the guidance on the earnings call, that's pretty typical for the company. The stock now call it pretty much flat in the aftermarket, but we've seen it bouncing around in a big way. With us right now to talk about it is CFRA Research Senior Equity Analyst Angelo Zeno on Zoom in New York City, and then Bloomberg Intelligence Senior Tech Analyst Anurag Rana in our Bloomberg Interactive Brokers studio. Anurag, I want to go straight to you first. I was listening, kind of glued to Surveillance this morning. What do you make of Microsoft?
I think everything is slightly above what people were expecting, but the big question is what is going to be the cloud guidance for next quarter, and does it mark the bottom in the declining growth of cloud, or are we going to look at another quarter or so of declining growth and then we see a U-turn because of all the AI workloads that are going to come up?
Remind us what's going on with cloud in terms of, is it business spending just pulling back or what?
Yeah, it is. That is what it is. Law of large numbers added with very pessimistic corporate IT spending. Last year, Azure grew 46%. This year, now it seems, it is around the 27% mark. The question is, the next quarter, is it going to be 28 or is it going to be 25 and below? So that's where we are at this point.
Just give us an idea, Anurag, of what happens with Microsoft and AI and what that looks like from a user perspective. I mean, we've all been there and I think played with ChatGPT. We see the way when we're typing email on Gmail, it does autocomplete. But when you power services and software for so many Fortune 500 companies, how do you integrate AI seamlessly into those products?
So first and foremost, when you look at anything generative AI, Microsoft is the #1 choice for a lot of the software vendors. I mean, when you look at when you want to play AI in generative AI, when you want the chip, you're going to go to NVIDIA. But when you come to software, Microsoft has a lead in terms of intellectual capacity, what they have shown, compared to everybody else. Now they have to show that they can add revenue to it, they can add more cloud usage to it, etc. In the long run, what you mentioned, companies are going to use this technology to power their internal productivity. But again, that could take a while. So we really are looking today to see whether we are seeing an increase in workloads on their cloud portfolio, or are we looking at corporate spending going down and offsetting any of those positives.
All right, Angelo Zeno, come on in on the conversation in terms of what we saw from Microsoft.
Yeah, no, I think as far as Microsoft is concerned, it was pretty much in line with expectations. I mean, of course, what we're all kind of interested about is kind of how AI is progressing right here with the company. I mean, clearly, when you kind of think of the Super 7 that are out there in terms of the biggest bellwethers, we think the best ways to play the AI story right now continue to be NVIDIA as well as Microsoft, because those are the ones that have been able to kind of really show the ability to monetize more kind of near term in nature. So clearly it's all going to be about the story that Microsoft tells on the earnings call here today. But that being said, I mean, our view here as far as Microsoft is concerned is they've got so many drivers as far as the AI story is concerned. Their tentacles are in so many different things that, if you see any type of significant pullback here after hours, you definitely want to be a buyer of the shares.
Angelo, who should we be concerned about in terms of losing, not market share, but not being on the AI bandwagon? I mean, I hear of Microsoft Azure. I wonder, okay, well, who's the biggest cloud player? We know Amazon Web Services is. Do they have what it takes to compete when it comes to AI?
Yeah, listen, and I don't personally cover Amazon, but I will tell you this. I mean, we do think that, Microsoft as well as Alphabet has a distinct advantage, given kind of, their exposure within the enterprise space and some of the tools that they're kind of rolling out on the AI side, I think, relative to maybe, what AWS has to offer out there. And just given the size of AWS relative to the others, specifically on Alphabet side, I think we do think the other two in terms of Alphabet and Microsoft are likely going to be share takers here over the next 12 months, at least on the cloud side of things.
Anurag, you mentioned about, the cloud growth that we're seeing, and they're talking about a 26% number. The number that we got a year ago, was that just off the charts? So that's not a fair comparison, or no?
No, they have been growing much faster than the year before. So, and that's also a function of Microsoft's cloud portfolio is much smaller than Amazon's. So it's just a matter of them catching up, moving a lot more of the on-premise workloads onto their portfolio. So the growth story for Microsoft Cloud's been there. Last year, we saw an unusual slowdown over the last 12 months. The question is, how long is the slowdown going to last? In our view, it's going to be either this quarter or next, and then we should start see a U-turn.
What I don't get is, I mean, everything's in the cloud. I throw more stuff in the cloud. Everybody throws more stuff in the cloud. So so when we see a little bit, so help me.
So the consumer side, I get it. All my pictures are in cloud.
Right.
But when you look at corporate
IT, like another expansion?
When you look at corporate IT spending, less than 20% of the workloads, less than 30% of the workloads, depending on how you define it, the majority of corporate IT spending is on premise. So we have a decade of growth over here.
But does it stay on premise for security reasons? Does it stay on premise?
No.
But
it's just lethargy. It's just legacy IT. You've spent $20-30 billion of, I'm just saying, let's say a big bank over the years just to develop a lot of these applications in-house. It's just going to take time for that to move.
Hey, Angelo, what's the number one question? Or come on in on the conversation.
Yeah, no, I mean, as far as kind of what we're looking for, at least for Microsoft here, it's really kind of, to the extent, to what extent are they going to be able to monetize, the AI revenue here in the September quarter as well as the December quarter, if you're kind of, more near-term oriented in nature. And, our view, again, is, when you kind of look at some of the commentary they provided in terms of Copilot last week, in terms of it, coming in at a price point about $30 per seat, as well as kind of, again, those cloud opportunities kind of, even potential, the search expansion potential that they've got on that. Expect revenue to accelerate here in the September quarter and therefore, and also in the December quarter. If you don't see that, I think really, that's where the stock could really take a hit. So that's what we're really kind of looking for as far as, what to expect and how to kind of look at the stock here going, through this earnings.
Yeah, I mean, at the close, the stock was up 46% so far this year. Right now, we're seeing shares of Microsoft just trending a little bit lower in the aftermarket, down about 1.5%. All right. Guys, thank you so much. So appreciate it. Angelo Zeno, Senior Equity Analyst over at CFR Research, joining us in New York City. Anurag Rana right here in our studio. He is Senior Technology Analyst at Bloomberg Intelligence. I'm guessing he's going to be on radio in the morning. I'm just kind of guessing. They're going to be one week breaking this down.
He's got a lot of work to do. You were listening to him this morning, and he's still with us.
More to come. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 20 minutes past the hour on Wall Street. We check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini. And Google shares of Google parent Alphabet, they are getting some attention in the after-hours session right now, as we've been talking about second quarter sales by some measures coming in stronger than forecast. Alphabet CFO Ruth Porat to become President, Chief Investment Officer. Stock is up about 6% in the aftermarket. Microsoft also reporting stronger than expected quarterly revenue, but a little light on the cloud side. That stock is slightly lower right now. Bank of America in advanced talks to buy PacWest Bancorp. A deal could be announced today. That's according to the Wall Street Journal. Shares of Bank of California, they finished higher. They would be the acquirer there, Bank of California. PacWest shares, they slumped about 27% on this news. UPS shares closing almost 2% lower. Tentative agreement with the Teamsters being announced. Consumer confidence jumping today. That could have helped stocks go higher. The Dow closed up about 27 points. The S&P 500 up 13, and the NASDAQ up about 86 points. Your yield on the 10-year right now slipping a little bit, we'll call it 3.9%. And that is a Bloomberg Business Flash. Carol and Tim.
All right, Denise, thank you so much. Carol Massar along with Tim Stenovic. He's back here on Bloomberg Business Week.
I'm back. I'm looking at Snap.
Down 16% here in the after hours.
Snap share is falling after sales forecast misses estimates. This on ad demand. What's interesting, Carol, is we actually saw Meta Platforms rise in the after hours. They report results later this week. This is the company, of course, formerly known as Facebook. But sometimes if we see bad earnings from Snap or bad numbers from Snap, we start to see something similar in Meta Platforms. That's not happening anymore.
Well, I'm going back to the preview of Snap that we had on the terminal by our Ryan Vostelica, who we talked to earlier, and he reminded us that Snapchat, the parent Snap, the past 4 reports have hammered the stock, so make it now 5 because earnings have come out and the stock's down about 16.5%. Basically, what you're seeing is, analysts have been looking for some stabilization at Snap specifically, and they're kind of skeptical about the growth potential for this company. And it seems to be continuing to play out when you see these earnings.
Still up 40% this year.
Right. Yeah, that's
which
true.
Is,
Did you look at the PE or the forward PE? 164.
Yeah. Okay.
So we got some issues there, but yeah. So we're seeing it, and basically, sales forecast is the real miss. Third quarter adjusted EBITDA loss, when that crossed, I said it. You said, "Oh my gosh," third quarter adjusted EBITDA loss of 50 to 100 million versus an estimated loss of 2.14 million. That's so much more, such a bigger loss than what the street was expecting. And also their sales forecast looks like it's a miss as well.
The company's saying in a statement, from a revenue perspective, our business remains in a period of rapid transition as we work to improve our advertising platform, while forward visibility of advertising demand remains limited. Again, I'm old enough to remember when an outlook from Snap actually sent concerns across the markets that the ad, this was like a year ago, Carol, a little more than a year ago, I think, when there were concerns about macroeconomic issues facing Snap. And there was a lot of, kind of chatter about that in the sort of post-mortem with Snap, because people were saying, should we really read into Snap for macroeconomic concerns? But when advertisers do pull back, they're tightening the belt on their ad budgets, and that means that they're spending less money, and oftentimes advertising is the first thing to go. But what I'm saying is this is not spreading across, to other advertising-supported platforms like Alphabet right now or Meta Platforms.
Well, when we talk about either like real estate or different assets, you've got like top tier properties, middle properties, and then kind of at the bottom of the pack. And I do feel like when ad budgets get cut back, companies still spend, but they reduce their spend, and they're going to go for where they get the biggest bang for their buck. And I don't know whether maybe Snap isn't considered as the place to go, especially as they're going through their changes. It's disrupted some of their service, how they do it, how they, they've been introducing new kinds of ads and things. So they've been changing their model. So maybe if I'm an advertiser, I'm like, we'll wait until things settle down a little bit, and we're going to go where we know it's kind of a sure thing.
We've had this whole conversation and haven't even brought up TikTok yet. And the way that, TikTok continues to be a fast-growing platform that just eats into minutes of people with phones.
What's interesting is Snapchat app still growing, 397 million daily users in the second quarter. Company says it will reach 405 million to 406 million daily users in the current quarter. I want to go, though, back to Google, because I do feel like it is a major story in the aftermarket. And if you're looking for outperformance, folks, there it is, because this stock is up 6% in the aftermarket as we speak. And there was a bunch of news, certainly on the company.
Yeah, the quarter returned to form for YouTube. I'm reading from our live blog here, which is just fantastic coverage. Our tech reporter, Julia Love, writing that the unit had been a drag on Alphabet's results in recent quarters, but this time it raked in $7.7 billion in ad sales. That beat analyst estimates of $7.4 billion. The question is, how is Alphabet leadership going to explain this during the call? Is the company seeing the worst when it comes to that digital ad slowdown we were talking about with regard to Snap, whether we're talking about with regard to Meta Platforms, or is YouTube faring better in its rivalry with TikTok? Its rivalry with TikTok. Have you seen this on YouTube, the YouTube Shorts, what they're doing?
I don't don't think
So
I have
if you
seen
go to
it.
YouTube on a mobile or even on a desktop, now they're really showcasing shorts, these vertical videos that look exactly like what you'd see on TikTok. So it's less sort of those, searchable long form things
Imitation?
that you go to YouTube. Absolutely. I mean, Facebook has done it. Meta Platforms has done it for years at this point with Instagram and Reels and Stories when, go further back with Stories copying Snap. But yeah, I mean, it's much less of a platform that you go to for search, and now one where they want to deliver you something with an algorithm just like they do on TikTok.
I mean, it's interesting in terms of, right, they all kind of follow what works and so on. I'm just looking at Alphabet, up 6% in the aftermarket. Second quarter revenue topping estimates. Second quarter YouTube ads revenue, $7.67 billion. That's a beat. $7.41 billion was the estimate. Second quarter Google Cloud revenue, also a beat, $8.03 billion versus an estimate expected of $7.83 billion. And second quarter EPS, $1.44 versus an estimate of $1.32. And then we had CFO Ruth Porat becoming President Chief Investment Officer.
Oh, that old news?
Oh, Mandeep Singh walking in the studio, Senior Tech Industry Analyst at Bloomberg Intelligence here in studio. Just on TV, we all want you. Tell us what mattered with these results.
I think clearly they've fixed the cost side of the equation. So a beat on operating income by almost $1 billion. And for the first time in the last 3 quarters, their operating income growth was higher than their top line growth, which is always a good sign. And
that's efficiencies, right?
That's efficiencies.
Is that another way of saying layoffs?
Well, they did that, but look, their compute costs are actually growing faster than the top line because they're investing in AI and all the generative AI talk. But they've been able to offset it with fixed costs, and layoffs are part of it. I think the other thing that stood out to me was the Google Other segment. That is what includes the YouTube subscriptions. So even though YouTube ad revenue doesn't look like a big beat, but when you layer in the subscriptions, YouTube actually is doing quite good when you compare it to Netflix or Spotify, and
That's so interesting. I've seen people say online that the YouTube
because they don't
subscription
have
is a great
good
value.
disclosures around YouTube subscription revenue. So it's embedded in that Google Other segment that also has the Android Play Store revenue.
This is just paying to get rid of ads on YouTube?
Yes. So
That's all you got.
They are showing you more ads, and they are converting a lot of those customers into paid subscription customers.
They're death by frustration of showing
Do
too
any
many
of you
ads.
do that?
I don't do it, but
and then there is YouTube TV as well as part of that. So they added an NFL sports package.
Right.
So they're adding a lot of sponsored content in there. YouTube TV is really a conversion of linear TV to digital TV.
Right.
And look, the gross margins aren't as attractive as their search business, but it's helping them with the top line. And ultimately, they're going to make a bundle that'll be attractive for people to subscribe.
I feel like it's like the sleeper coming in, right? It's just interesting as we talk about kind of the strains in streaming. Ruth Porat, her taking on a much bigger role, it feels like. How do you explain that? And as Tim mentioned, she's older than Sundar Pichai. So, like, is she being groomed for CEO or something else?
I think that probably is too early to say, but some people would argue Google was behind when it comes to launching products that competed with ChatGPT. So there are concerns around, Sundar's aggressiveness to launch new products, and that's why you had Sergey come back. Look, at the end of the day, Ruth Porat has done a great job of driving the efficiencies, and you see that in the results, the operating income growth.
Money talks.
And so I think what she's doing here is really focusing on what Google could do in terms of their minority investments. So they took a stake in this company called Anthropic, which is a generative AI play. Remember, Microsoft took a stake early in OpenAI?
Right.
That's what Google is doing with all these generative AI startups. They can't buy anyone, so they are taking these stakes. And I think I can see how Ruth could be involved in just, more capital allocation and taking stakes in companies.
Which is where she came from.
Which is where she came from. So
Right at Morgan.
I think it's a good way for them to involve her, in the future of the company beyond the CFO role. And I think overall it's a positive for investors.
Mandeep, in the last 40 seconds that we have with you, concerns about Google search being siphoned away by ChatGPT, are they overstated?
At this point, they are, because even though I think Google search volume probably has taken a hit because of ChatGPT, the ad pricing it's still the highest ROI ad spend when it comes to the industry. You know, everyone talks about Google search and how effective it is. I think they will incorporate the features from ChatGPT into their search page. Remember, whatever ChatGPT is doing will get commoditized eventually. There is like nothing that I feel Google can't replicate on their search page. So my view is they're going to enhance the search page, and hopefully the engagement will be there.
This is what you talked about earlier. Revenue in the search and other category includes Google search increased to $42.6 billion during the quarter. That's a lot.
Yeah.
All right, we got to run. Thank you. I know you're busy. Thank you, thank you, thank you. Mandeep Singh, Senior Tech Industry Analyst here at Bloomberg Intelligence.
Let's get a check on the latest world and national news. Nancy Lyons standing by in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is pushing insurers to improve access to mental health care for Americans.
Mental health care is health care. It is health care. It's essential to people's well-being and their ability to lead a full and productive life.
Biden is proposing a rule that would strengthen requirements so that health insurers would cover behavioral health at the same level as physical health. He says there's no distinction between breaking your arm and having a mental breakdown. Earlier in the day, President Biden designated a new national monument to honor Emmett Till and his mother, Mamie Till Mobley. It will stretch across 3 locations in 2 states. The black 14-year-old Till was killed by white supremacists in 1955 after being accused of making lewd remarks to a white woman. Today would have been his 82nd birthday. House Speaker Kevin McCarthy is dropping his strongest hint yet that Republicans could try to impeach President Biden.
The Speaker gave an interview to Fox's Sean Hannity last night, saying the investigations into Biden family business dealings are, quote, rising to the level of impeachment inquiry. Republicans have been trying to build a case based on IRS whistleblowers who say the Justice Department tried to interfere in Hunter Biden's criminal probe and that the Biden family received foreign payments based on an uncorroborated FBI document. The Washington Post reports the White House tweeted after McCarthy's interview, saying Republicans' eagerness to go after the president regardless of the truth is seemingly bottomless. In Washington, I'm Nathan Hager, Bloomberg Radio.
A federal judge has struck down the Biden administration new rules for asylum seekers at the southern border. The judge ruled against the policy that allows immigration authorities to deny asylum to migrants at the border if they did not first apply online or seek protection in a country they passed through. Global news 24 hours a day.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini. Keeping an eye on shares of Google. They are up just about 6% in the after hours. Been a lot of hand-wringing about whether OpenAI's ChatGPT will siphon away users from Google. No sign of that yet. Revenue, Google Search and other category, which includes Google Search, increased during the quarter in line with estimates. And Microsoft, though, those shares are trading lower in the after-hours session. Microsoft reported tepid fourth quarter sales growth. The Fed tomorrow widely expected to raise interest rates. Drew Mattis, chief market strategist at MetLife Investment, says he sees a recession, but then after that, he says we'll see a pickup.
So let's get past the next recession, whenever that is, right? We think it's next year, but let's just say in the future. When you come out of that recession, what are you going to have? We're very optimistic there, and that means higher potential growth rates. We think that there's the potential for participation rate rebound, even beyond what we're seeing, higher productivity, although it's hard to get lower than we currently are, but we expect a rebound in productivity that's sustainable and will be sizable. And we expect, therefore, that potential growth will be higher. And with potential growth being higher, we expect neutral interest rates to also be higher at that point.
And that was Drew Mattis at the Bloomberg Surveillance Podcast. Stocks, as I mentioned, finish higher overall. The Dow up 27 points at the close. The S&P 500 up 13. The NASDAQ up 86, we'll call it. PacWest shares, they plunged 27%. PacWest reporting total deposits for the second quarter that beat average analyst estimates. But that's not why everybody is watching the stock. PacWest merging with smaller rival Bank of California as it seeks to navigate what you might call a bout of upheaval that brought down a handful of its peers. Details on that deal are still coming out. And that is a Bloomberg Business Flash. Carol and Tim.
All right, Denise. Yeah, you're right. A lot going on and watching it all. Microsoft, by the way, which had really kind of dropped a bit in the aftermarket, just down about 0.6%, so not as low as it was earlier, so not as much disappointment, it feels like.
166 companies this week in the S&P 500 reporting earnings.
Something like, is it 40% of the market cap or something? It's something crazy.
I wouldn't be surprised.
It's something really crazy. All right, so we're going to shift a little bit from earnings. You know, Tim, we've been talking a lot about the current cover of Bloomberg Business Week. It's all about WW, Weight Watchers, and their new strategy where they are really banking big time on this kind of new class of weight loss drugs. So we're talking about Ozempic and Wegovy. Wegovy, am I saying it right? Wegovy.
I was going to ask you.
Yeah. And so we wanted to take a little bit of a bigger look at what's going on with obesity, because we have definitely seen the worldwide economic impact of obesity and excess body weight expected to more than double to $4.27 trillion in 2035 from 2020 levels. I mean, there is a big cost, healthcare-wise, productivity-wise, and just, health-wise for individuals.
Fortunately, this afternoon, we've got Dr. Angela Fitch with us, the co-founder and chief medical officer at the Boston-based healthcare practice known well, president of the Obesity Medicine Association, OMA. It's a network and networking group for healthcare providers. Dr. Fitch is an assistant professor of medicine at Harvard. She joined us via Zoom from Boston. It's good to have you with us, Doctor. Thank you so much for joining us. So talk a little bit about, Carol laid this out for us, but obesity, not just a problem for health and a problem for healthcare. Lay out the problem, why it's just such a problem for society and not just America right now.
Yes, I think Carol did an amazing job of highlighting that. Not only that, so many people are focusing on the cost of medication right now, but there's a huge cost to not treating obesity as well. The WHO a few months ago the World Health Organization published a announcement saying that we are spending as much on obesity as we did on COVID every year. So in other words, the COVID pandemic, the cost of the COVID pandemic across the world is what is also spent on the disease of obesity. So it's not trivial. And now that we finally have effective treatment for it, we really need to find a way to work together at all levels to try to help people get access to this care.
What do you think of these weight loss drugs, Ozempic? I know individuals who are taking them, some are diabetics, and it's a game changer in terms of their levels really kind of evening out, and they're losing weight. And then we know the celebrity stories and all these people who are taking it to just lose a lot of weight. But what do you think of this class of drugs?
So in our obesity treatment space, the 5,000 clinicians that are members of our Obesity Medicine Association that I'm the president of right now and honored to be so, all of us are very excited about today and the future of weight management. And we like to talk about these drugs as anti-obesity pharmacotherapy too, right? Because they're not just about weight loss. We're talking about treating a disease of obesity, which isn't just focused on a number on the scale. There's many reasons why people want to lose weight: to be able to be more mobile, to be able to do better at their jobs. For some people, their livelihood depends on it. So again, it's a very important thing to consider them as anti-obesity pharmacotherapy. And that is really the Wegovy, right? Because Wegovy is approved for weight management, while Ozempic is approved for diabetes treatment. And so again, we do want to focus on the right language, as we talk about these treatment strategies.
Well, this is just one strategy when it comes to treatment strategies. What are other treatment? But it's one that's getting a lot of attention right now for a lot of reasons. What are the other strategies that people should be focused on?
Well, again, this is all part of a comprehensive care pathway, right, for any chronic disease, whether that's diabetes, hypertension, heart disease. We've always focused in medicine on not just the one pillar of treatment, which is a medication option, but on other lifestyle factors as well. And for other chronic diseases, we've always focused on this. But we've never made people necessarily jump through the same hoops that we make them jump through when we talk about obesity, because there still is a large societal feeling that obesity should be able to be treated by oneself, that we can somehow overcome this disease by our own willpower or our own accord.
I have a colleague who said, it's exactly what this individual says to me. It's like, it's just a choice, just don't pick up the ice cream.
And that's
kind
not
of thing.
the case, right? We find scientifically, actually, that that's not the case at all. That this is a multifactorial disease. And certainly lifestyle changes are very important for all of us. The environment we live in is not healthful today, and we need to work to change that also, right? At the higher levels, right?
How high the government? Yeah. So talk about what you think the government should do.
Well, that's always hard to say exactly because it goes back and forth, depending. But I do believe that we have to make changes, even, at the society level where we can make choices, right? So we can choose to vote people into office that are going to support more broader treatments for obesity as we look towards the future too, and also making our lives more healthful as well. Providing more access to fruits and vegetables, providing more access to whole foods instead of processed foods.
Dr. Fitch, though, you know what? I feel like I've heard that, just like a couple of other things about diversity and so on and so forth. I've been doing this a long time. Tim has too. It's like the idea about a healthier diet. I get it, and then. You have a massive processed food industry, sugar,
food deserts in many cities.
So
it's hard to manage.
How do we fix it?
Well, I think we fix it. I think that's the multi-trillion-dollar question. I'm not sure how we fix it as a society. We have to move towards some of the things that higher level, people have talked about in this sort of, this is not my level of expertise as well as far as food policy goes. But I do think that the more we as consumers as well, at the grocery stores can make those choices as much as we can. And again, we recognize it's hard for a lot of people, but we're also improving that at local environments. At the Mass General Weight Center where I used to work, and at Mass General in general, we have a food bank now that provides fruits and vegetables to people who live in food deserts. So there's a lot of these sort of groundswell of things that are cropping up across communities, I think, to help in the community setting, to improve access to nutrition.
Now, all part of this important conversation. As we said, the cover story of Bloomberg Business Week is all about what WW is doing with these drugs and their new strategy. Dr. Angela Fitch, thank you so much. Really enjoyed it. Co-founder and chief medical officer at Known Well, and as we said, and president of the Obesity Medicine Association. Hey, we do want to mention, Tim, you caught this, Wells Fargo, stocks moving in the after hours.
The company reporting a new $30 billion stock buyback program. That's pretty big, Carol.
Yeah, that's why the stock is up 3.5% in the aftermarkets. We love buybacks. We know what it does. And, it's interesting. We got through the bank earnings, and we're watching, so many different metrics when it comes to the health of the financial system and the banking system. But Wells Fargo, that's pretty massive, $30 billion. Stock's up 2.9% in the aftermarket. Just a quick check, Wells Fargo up about 10% so far this year. All right, you're listening and watching Bloomberg Business Week. Carol Massar along with Tim Stanovic. More to come right here on Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini. Shares of Google parent Alphabet getting some attention in the after-hours session here. Second quarter sales by some measures coming in stronger than forecast. And Alphabet CFO Ruth Porat to become President and Chief Investment Officer. Stocks up about 6% right now. Microsoft also reporting stronger than expected quarterly revenue, but a little light on the cloud side. That stock's been slightly lower in the after-hours trading. And regional banks, Bank of California and PacWest Bancorp, they are merging. Shares of Bank of California, they finished solidly higher on the news, but PacWest shares, they slumped 27% as those headlines started to cross. General Motors beating quarterly analyst estimates, raising profit projections, but investors are signaling some concern about the stock. And Paul Jacobson, CFO at GM, says he's not sure about more price hikes right now.
I'm not sure that we're going to be able to raise prices across the board. After the first quarter, we raised guidance by $500 million on the EBIT line, and now we're raising it by $1 billion. So we see a lot of stability in the market. We're just kind of taking it one day, 1 month at a time, and watching the results come in.
And Jacobson there on the Bloomberg Surveillance podcast. Shares of GM, they closed down just about 3.5%. And guys, you didn't ask for it and you might not want it, but just in time for that summer cookout. And if you got the munchies, there's a new mustard flavored Skittles. You heard that,
that
right?
is
Yeah.
disgusting.
French's mustard.
Come on,
Teaming up with
world.
candy giant Mars. What kind of branding won't they think about?
That is just.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 studio in Washington, D.C. Hey, Nance.
Thanks, Tim. The U.S. Department of Education is investigating Harvard's policies on legacy admissions. That's when applicants with ties to alumni receive preferential treatment. This probe follows the Supreme Court decision last month that struck down the use of affirmative action as a tool to diversify college campuses. Well, saying it's hard to imagine what the family went through, President Biden is taking steps to commemorate Emmett Till and his mother. Till's brutal death at the age of 14 spurred on the civil rights movement.
Today we join together as I sign a proclamation designating Emmett Till and Mamie Till Mobley National Monument in both Illinois and Mississippi.
With the stroke of Biden's pen, the Emmett Till and Mamie Till Mobley National Monument will be federally protected. Biden administration officials now confirmed that Trevor Reed, the American freed from Russia in a prisoner swap last year, has been hurt while fighting in Ukraine. State Department Deputy Press Secretary Vinit Patel.
We are aware that through the support of an NGO, Mr. Reed has been transported to Germany and he is receiving medical care.
Patel says Trevor Reed was not engaged in any activities on behalf of the U.S. government. Florida Governor Ron DeSantis is said to be fine after being involved in a car accident in Tennessee this morning. The crash happened while the Republican presidential candidate was traveling to an event in Chattanooga. His campaign says DeSantis and his team did not suffer any injuries. And Bronny James, the eldest son of the NBA's LeBron James, is said to be in stable condition after going into cardiac arrest during a basketball practice yesterday at the University of Southern California. The 18-year-old James will be a freshman at the school this fall. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, so appreciate it. Nancy Lyons there in our D.C. bureau. Just a quick kind of roundabout, if we may, on the stocks that are moving the after hours following earnings. Starting with Google, it is up 7.6% and as pretty much out of the gate after earnings after the close just jumped. Basically, they had a revenue beat from their Google search numbers, second quarter revenue topping estimates, and then, of course, you had the other news that the company's CFO, Ruth Porritt, is adding on to her responsibilities, becoming president and chief investment officer. But nonetheless, second quarter revenue ex-TAC, a key metric, $62.07 billion versus an estimate of $60.27 billion. So, yeah, they seem to be firing on all cylinders.
There is one weak spot we should note, Carol, even though stock right now is up, 8% in the after hours. Google serves up ads on other parts of the internet. It's called the Google Network Business. Sales of $7.9 billion, down from $8.3 billion in the year-ago quarter. The federal government also took aim at the business earlier this year with an antitrust case. Insider intelligence analysts wrote in a note that Google's recovery is uneven, with Google Network showing